Canada's housing market, it's changing fast. And I'm not just talking about prices, I'm talking about what we're actually building. From Toronto to Vancouver, developers, they're hitting pause. Construction is slowing, and the balance of new homes is shifting dramatically. Single family homes and condos are completely dropping off, while purpose built rentals, well, they are surging. We're going to break down what it means for the next wave of housing supply, why developers are pulling back, even as government incentives are pushing them at like record levels, and how cities like Burnaby, they're already rethinking their densification bylaws after public backlash. Plus, we had a very surprising jobs report, and let's dive in to see what that really says about the strength of Canada's economy. So off the top, we're talking about what we're building, and there really is a fascinating shift taking place in the types of homes that are under construction today. Let's look first at Toronto as basically the leading indicator. Dwellings under construction, well, they dropped off 2.3% last month, or in August, alone, and they're down 10.7% year over year. And most interesting is the steep drop off of condos being built. And this is somewhat understandable due to the very limited amount of new projects that are launching since the market turndown began. And now we're seeing the construction numbers follow. But when we look even closer, it tells a very compelling story as to what types of homes that we can expect to see completing in the upcoming years. The change in units under construction is best demonstrated as follows. Single family homes under construction are down 17.1% year over year. Condos are down 16.4% year over year. But purpose-built rentals, they're way up 15.5%. Now, when we look more local in Vancouver, single family down 8.9% year over year. Condos down 2.1% year over year. Purpose-built rentals, well, similar to Toronto, they're up, but only 2.2%. So similar, up-down ratio by product type, but obviously to a lower degree than Toronto. But one more, let's check out Calgary now. Single family homes down 2% year over year, condos down 3%. Purpose-built rentals are up 54.9% year over year. This is showing us that over the next 3 to 5 years, we're going to see fewer and fewer condos and single family homes completing and a ton more purpose-built rentals coming to the landscape. The most probable outcome of this is that, well, rental rates are going to continue to lower. The independent mom and pop style investors will see their returns drop, and that will result in probably even more condos coming to the resale market. Single family homes are clearly disappearing at an incredible rate, and it's largely for densification purposes, right? Extremely few single family homes are being torn down to put up another one, right? Outside of areas here, maybe like Shaughnessy, Point Grey, West Van, Kitsilano, all those types of areas. Because of course, what's happening, single family homes are being torn down, duplex, triplex, basically multiplex is replacing them. And the trajectory of end user homes under construction will continue to fall for at least the next couple of years. While the majority of Canadians are currently homeowners, the trend, the percentage of people renting, well, it is increasing. And when it comes to straight up affordability on like a monthly payment basis, this trend is certain to continue for at least the foreseeable future.
It doesn't seem like to me that politicians were able to tie an affordability outcome to their promises with housing. And unfortunately, this appears like the alternative is to ensure that single family homes don't get built, but everybody can rent. I just don't know how we build wealth and grow things like GDP for the middle class if this is the path we continue down. And, the writing is a little bit on the wall here, especially when it comes to developers, as they're pulling back even further. I mean, when we look at the future pipeline of what's being built, we're seeing a dramatic pullback in building permits taking shape. I mean, we've reported on this before, but, the residential building permits here fell by 2.4% year over year. And when you adjust it for inflation, the value of those permits dropped by 7.9%, or over $500 million compared to last year. Home builders are planning for fewer homes as weakening demand and rising costs are squeezing budgets. This is most notably seen in the single-family home segment, where building permits lowered by 10.5% year over year. Multifamily has been somewhat more resilient, but is also turning down now as well. I mean, permits peaked in December of 2024 and have dropped a whopping 28.7% by August of 2025. The writing is on the wall here when it comes to developers hitting pause. Even as policymakers are rolling out record-level building incentives, it's a clear warning that the perceived risk is now climbing faster than the incentives meant to offset it.
Yeah, it appears the incentives that were provided to developers, again, were clearly heavily in favor of producing or building, constructing purpose-built rentals and not homes built or affordable homes built for what would be end users. And it's all coming to light now in real time. What's more is when we look to the city of Burnaby, they were, if you remember, basically the first to adopt the multiplex legislation, and to the most liberal degree. And now that a bunch of these properties, these multiplexes are under construction, residents are getting a look at what was allowed to be built, and it's receiving some understandable pushback. A couple properties of note that have been kind of circulating the socials lately include a 4-story laneway home and a very narrow 4-story building on a street corner. We'll share those images on YouTube. These types of homes, I mean, they understandably upset residents who pushed, therefore, for a city council meeting to discuss if the zoning bylaw changes simply went too far. The meeting, it drew a packed house where both sides, if you will, shared their opinions and their stories on the recent densification changes. It was also discussed that the land that's being purchased by developers, they need to see the numbers pencil. And so they're targeting properties where they can build big. And ultimately, the variable when a developer is running their pro forma, is the land. And they were able to push some land values down to the tune of like a couple hundred to maybe even $500,000 from somewhat recent comparables. And so it appears that some of the pushback also came in the form of the fact that homeowners did not like seeing property values decreasing because of all the development coming into play here. The most common group of concerns raised by residents, it related to the height and the scale of these new buildings, with the most common issue being that they were seen sort of out of character for the plan and the houses that were adjacent to them. And they were therefore inappropriate for the existing neighborhood. Some of the related concerns included the imposing design of these larger buildings, privacy concerns created by the overlook into rear yards, the impact they had on private views, and shadowing of neighboring yards and gardens, right? If you put up a 4-story laneway, pretty easy for someone to look out their window into your backyard and see what you're cooking on the barbecue or what have you, or cast a massive shadow on your garden. So another reoccurring concern was the adequacy of on-site parking. Residents expressed concern that insufficient on-site spaces would lead to increased street parking and reduced availability for existing households. And again, I mean, this is a very understandable concern. I mean, there's a number of projects that were literally 16 units in size that are going up in Burnaby with 0 parking included. No garages, no pads, no nothing. All these people were either expected to not drive, or ultimately they'd end up parking on the streets, which causes that aforementioned, reduction in availability for current homeowners. So ultimately, it's understandable, and it looks like the local residents were heard and that the bylaws will be scaled back. The overall impact of the proposed amendments to the scale of the new small-scale multi-unit housing development is going to be about a 17 to 38% reduction in the height of what can be built. And it depends on the housing form, right? And the location and the unit count. And about a 33% reduction in the achievable gross floor area, basically how much they can build on that lot. The proposed amendments to parking rates are going to be adjusted as well, right? They're going to increase from a minimum of what was 0 to 0.5 spaces per unit, increase to either 0.67 to 1 full space per unit. It goes on here. So they're going to ultimately reduce the maximum lot coverage by about 5% for all the R1 zone lots. They're going to reduce the impervious surface area requirements from 70% of the lot down to about 60% for 4 units and down to 50% for up to 3 units. This is a big one here. They're going to reduce the overall permitted stories. Okay. As we just discussed, people can build up to 4 stories right now, including laneways. That is going to drop to 3 stories and further to just a maximum of 2 stories for these rear principal buildings, these laneway homes, if you will. So don't expect to see any more 4-story laneway homes. This one has a lot of impact. Okay. They're going to reduce the maximum building height from 12 meters down to 11 for row home, but down to 10 meters for 4 to 6 unit multiplex dwellings. That is dramatic, and I'm going to get into that in a sec as to why. They're going to reduce the maximum building height for the laneways, the rear principal buildings, as they're called, to 7.5 meters, and increase some of the yard setbacks from 1.2 to 1.5 meters in alignment with rear yard setback standards. Okay, so should all of these go forward and be formally adopted, when we look at how the builders, how the developers are going to have to face these, I mean, a couple things. One, when you build less, you have less to sell. And that makes your project harder to pencil out and will straight up make some projects completely unviable. They just will not be able to go forward with them as they were before, right? These guys weren't building with these extreme profit margins built in. They just started to work thanks to the new bylaws. When it gets to that 10 meter down from 12 meter, this is where things really change, because this will modify the livability of a lot of these homes, right? They were trying to build these nice, 9, 10-foot ceiling homes that are now going to be reduced down to maybe your 8-foot ceilings. And if you've ever enjoyed a 10-foot ceiling, you know how impactful that is compared to, let's say, an 8-foot ceiling. And now maybe that third floor, well, instead of having a maybe 9-foot ceiling on the third floor, you're likely going to have these sort of gabled ceilings, which will reduce the amount of actual usable or livable space. So it's going to change what can be built. It's going to make homes less livable, in my opinion. Again, we'll see how this all washes out. And it's not like I'm taking sides here. I'm just kind of sharing thoughts on both sides here, right? Because no matter what side of these changes you might be on, I think the inevitable outcome will be that fewer homes will be built in the Burnaby area. And the ones that will be built are going to be smaller than under the current zoning bylaws. So the final changes of what will be adopted is going to be published next month in November, and we'll of course provide an update then. But very interesting to see, again, a city try to bring in what is called gentle densification, see a major pushback because obviously they didn't do it, I guess, correctly, if you will, right? Again, a 4-story laneway. It's understandable why people don't want that. So they missed the mark in some areas. But again, now are they going too far in their amendments? We'll see how it all washes out. But ever evolving, and just, again, another story about even the residents, the citizens pushing back against densification.
Yeah, I think, Dan, when you talk about some of these proposed amendments, certainly, I think the goal of some of these amendments is to actually stop the construction of some of them. And like you said, it will result in less homes being built. And, there wasn't a huge margin in these homes to begin with. So it'll be very interesting to see how the market responds to these changes. But, I can, when you see something like that 4-story laneway going up, it's obtrusive, it's in some kind of way is a bit absurd and really maybe should have been better thought out. But again, this is, we're rolling out this densification, this gentle densification in very quick time. This was, again, a knee-jerk reaction to the housing crisis from many years prior. So it'll be a work in progress, but it'll be interesting to see how it unfolds. Let's move on now to the jobs report here that Canada came out with, because it came out this week. And if you just paid attention to the headlines, it looked like a complete blowout. This was an awesome sort of report. Stats Canada reported 60,000 new jobs in September, crushing the expectations of just 15,000. And even better, these weren't all part-time positions. In fact, 106,000 full-time jobs were added, while part-time employment fell by 46,000. And on paper, that's fantastic. But the reaction from the markets was surprisingly muted. Bond yields barely moved. The 5-year only rose by about 5 basis points, which tells us investors weren't totally convinced by the headline strength. And for good reason. When you look under the hood, there are a few soft spots in the data that make the overall picture a little less rosy. First of all, more than half of all the job gains came from the public sector, which now represents the largest share of total employment that we've seen in the last 25 years, of course, outside of the pandemic. And that is really concerning because, Prime Minister Carney has pledged to rein in public sector hiring and try to encourage private sector investment, neither of which are sort of playing out in this jobs report. Second, 3/4 of the total job growth came in just one province. It came through Alberta. Meanwhile, Ontario and Quebec added only about 4,000 jobs combined and have actually lost 32,000 positions over the last 3 months. That tells us trade weakness and slower manufacturing activities are still putting real pressure on central Canada's economy. What's third is despite the headline job gains, the unemployment rate held steady at 7.1%, which remains the highest since 2016, excluding, of course, the pandemic. And finally, and this one is key, hours worked actually declined by 0.2% in September. This is super important because the total hours worked feeds into the total GDP growth. So even though we technically have more jobs, Canadians are working less overall. Employers are cutting overtime, they're shortening the work week, and that's not a great signal for economic momentum heading into Q4. So when you put all of this together, the jobs report sounds great at first glance, but the underlying story is far more mixed. And then, of course, the entire market narrative shifted again when Trump hinted at higher tariffs on China, sending equity markets and bond yields way lower. And once again, Canadian data took a backseat to these global politics. So at the big picture level, bond yields have been remarkably stable since August. And until we see a real break in either direction, mortgage rates are likely going to stay put. Markets are still pricing in another quarter-point rate cut from the Bank of Canada on October 29th, which could mark the low point for this cycle. But ultimately, we were faced with a very strong headline with a bit of a shaky foundation and, markets that are simply looking past what feels like a lot of noise out of a report that is producing downward signals.
So essentially, the country is trending towards everyone working for the government and living in government-created rental homes.
You will own nothing and be happy.
Yeah, different form of happy perhaps, but that is where things are happening this week. As always, we appreciate you tuning in and listening. Have a wonderful weekend, and we will see you here again next week. Bye.